What's up, weirdos? What's going on, guys? Another day, another way to win. Let's check it out. Let's see what's going on. What's going on around the space today? Bitcoin putting in these scary 4-hour and 1-hour candles. Now, I did a video this morning outlining that we might come down and wick down and test the 200-day moving average, which is currently at $107,375. Now, if that doesn't hold, we could come down and test 106,900. But here is the long and short of it, guys. There is, in fact, a CME gap at $104,000. Will we fill that CME gap? Let's put it on the board. Let's put it on the board, ladies and gentlemen. 104,000. All right. We'll just do that. Okay, so let's get rid of this. This is just $100,000, right? So we have the CME gap right down here. Will we come down and fill this gap? Well, we would have lost all of our moving averages at that point. And here's the thing. Again, I touched on this morning. What we've been doing here, guys, right, as you can see, what have we been doing? Well, we've been putting in higher lows, which is a bullish structure, right? However, this collapse down here, we've lost our trend line. If we do not climb back up and close today's daily candle above this red line here at $110,580 roughly, right? If we don't get back up above that level for the daily close on this candle, well, we have officially started a downtrend and we've moved out of the uptrend, right? So that would say to me that we are going to be in a prolonged, not too long when I say prolonged, but at least a couple of weeks, in my opinion, of a downward structure to come down here, right, and test or fill the CME gap before coming back up, right? Because we're putting in a lower low, right? So that says to me potential for a downward momentum over the next week or two, roughly, right? So personally, I'm going to be holding off on DCAing today because I believe we're going to see lower prices. And if we're going to see lower prices, the only way we're not seeing lower prices, in my opinion, is if this, like I said, if this candle gets back above this red line here at $110,581 and closes there. It's the only way we're not starting a downtrend here, in my opinion. Anyway, it's already started on the lower time frames. So something you need to be aware of. So I'm going to hold off personally on DCAing until I think we've kind of, I think we're going to come down to 104. I'll probably become a little bit more aggressive around 104 in terms of accumulating. But for right now, I'm going to hold off, save my dry powder, wait for down here. Okay. Let's dive into the super chats. Cody, my guy, don't forget to smash the like. You're the best. Hey, Cody, let me know in the chat, my friend. You said that you had sent me something to my box number. Have you sent it yet? Let me know. I'm not sure because Canada Post just finished being on strike. So I need to know basically the status of that whole situation. Ramona, she says, happy Thursday, everyone. Please hit the like and subscribe both here and on Crypto Blueprint, and check out Pico and LFG. Yes, absolutely, guys. Also, I would like to add to that it is Thursday night's special live stream over on the Patreon with Max and Rule Black. So do not want to miss out on that, guys. Strawberry Dragon dropping that super sticker. Thank you so much. I appreciate you. Andy, my dude. Spencer Freeze dry eggs on sale for dry powder. There you go. Long story short. Phil, thanks for awesome one-on-one coaching yesterday. I really appreciate it. Hey, no problem, brother. I got your back, man. Candyman says, first rule of cleaning while listening to music, the toilet brush is never a microphone. Never. Lesson learned, my friend. Lesson learned. Absolutely. Let's get into the chat. Let's see what's going on out there, guys. Carl, let's go. Absolutely, brother. William, good to see you, buddy. Good to see you. Andy, reposting over on X. I appreciate you, my brother. H. Barbarina in the house. As usual, Jake the Snake. I feel you V-shaped recovery after 104K. How about you? I dig it, man. I dig it. Let's fill that gap. Jake the Snake, chilling and killing like a villain. Oh, House says, I couldn't help myself, Rob. I canceled my buy orders and bought 2K on that gem you talked about. Hey, that's a pretty good scoop up, man. Trump talks at 3 p.m. today, I believe. Really? Does he? Let me have a look. Is Trump speaking today? That could be a catalyst in itself, depending on what he's talking about, guys. Is Trump speaking today? Let's find out. Confirmed. What do we have here? Public speaking events. Yes, he has a press briefing on crime, a phone call with Putin, and a major announcement on the U.S. India-Russia oil trade. So that's what he's talking about today. Nothing really directly involving crypto. Nothing involving the Fed. Press briefing on crime. We'll see. The only thing that I think really could affect the markets is any bad news coming out about his call with Putin. That could end up being a markets crash on that. And same thing, any negative news about the Russia-India oil trade announcement situation. Could see some negative news or some positive news come out of that. But outside of that, I think most of that is just nothing burger stuff for the most part. So we'll see what happens. Ramona says Trump spoke with Putin about 4 hours and is meeting with him next week, meeting with Zelensky tomorrow. Oh, there you go. Well, hopefully this time around they actually get some progress done, right? Like, for crying out loud, man. For crying out loud. That was the worst accent ever. I don't even know what I was trying to do there. Ray, what's up, buddy? Put on your patience hat. Don't be fooled into panic selling. Godfather Rob has us in Patreon well informed. Smash the likes. Yes, absolutely, guys. Absolutely. I made an analogy in a video this morning that I stole from Andrew Tate, guys. Quite simply put, you got two people, right? One believes in ghosts, the other one does not believe in ghosts, sleeping in an abandoned house. Okay, in the middle of the night, you hear a bang. Well, the person who believes in ghosts is going to stay up all night terrified, missing sleep, thinking that there's a ghost in the house. The person who does not believe in ghosts is going to get a good night's sleep. Which one are you? Are you going to be up all night terrified, or are you going to take advantage of opportunities that are in front of you? Again, saying that, though, I'm personally not DCAing today, guys. I'm waiting for lower prices because I do believe we will be seeing those lower prices. For full transparency, Fridge, member for 1 month. Supposedly, the insider guy who put in that short before the crash just closed his short for longs on ETH. And, oh, nice. I guess we'll see what happens there, man. Ramona said the call was productive. I hope so. I hope so. Like, let's put a stop to all this economic, uncertainty, man. It's driving me nuts. What else do we have? Guys, make sure you're hitting the like and subscribe. I got a cough. Make sure you're hitting a like and subscribe. We got 322 people watching. We have, how many likes do we have here? 45 likes, guys. Come on. 355 people watching and 45 likes, man. Holy smokes. That is an insult. You know me. What's up? I'm a Sissy Bear Chicken Wuss. Hate having to sit on my hands and ride this one out. Hey, there's nothing wrong with just sitting on your hands, man. Nothing wrong with that. Right now, I'm just sitting on my hands, right? Patiently waiting for more dry powder. There you go. There you go. Got to work that OT. Ty says, what's going on, man? Your thoughts on USDC lending on Coinbase for 10%? Yeah, lending's going to be the norm, man. That's just how the things are going to be moving forward, right? Quentin, what's up, buddy? Good to see you, man. Holding strong. That's what I like to hear. Currently at 27 likes. Let's go, people. Smash that like and subscribe on the way in. Yeah. Did we get the likes up a little bit? 328 people watching. That's absurd, guys. That's an absurd number. 328 watching, 55 likes. That is like just a big old middle finger. Why would you not hit the like button? What do we got? Spuds, what's up, buddy? Jared, another day, another DCA. There you go. Dave, what's good, man? What's up, man? Cody says, what's up, crypto fam? Hybrid Dad, it's crazy to see so many people's emotions controlled by how the market moves. Have faith in Jesus and don't forget, as bullish as you were investing your money, there is no guarantees in it. Exactly. Well said, my friend. Well said. Beebs, what's up, my dude? Good to see you, man. What's the fear and greed index? Super scary. Let's get it super scary for Halloween. Nice. It's spooky. It's the spooky fear. It's the spooky greed and greed index now. What else do we have? Milk Money. Happy Thursday. What's going on, man? Easy. Yo. What's going on? Double the likes for double the gains, says Milk Money. Let's go, Rob. Spencer's catching strays all day. Yeah, the punches just keep coming, eh? We love Spencer. We love him. Trump pump incoming. Hey, hopefully, man. Hopefully. Kizza, what's up, buddy? I will have fully gray. I will be fully gray. Yeah, this beard was black before this cycle started. What do we got? Kizza says the day has come. Rob said no more DCA, but it's not in a good way. Yo, it's in a good way. Lower prices means building up some more dry powder so you can scoop up lower. Absolutely. AF says happy to be patient. Thanks, brother Rob and the Patreon community. Absolutely, man. Pam, what's going on? Everyone hit the likes for Rob. Yes, absolutely. Richie Rich says the same thing, guys. Smash that like button and subscribe to the channel. Guys, we only need, check this out, guys. We only need, what do we need? We need 46 subscribers. If we can hit 46 subscribers, we will hit 15,000 subs, guys. Smash that subscribe button. Push us up over that 15K subscriber count. What are we at? 73 likes. It's getting better. We can get to 100, though. All right, we're caught up in the chat, guys. Let's deep dive into the news. So, again, just reiterating for anyone who just came in, Bitcoin If it does not come back up and close above this red line here at $110,581, we will be officially putting in a lower low and starting a downward structure, so a downward trajectory. So that would bring us to a potential fill of the CME gap down here at $104,000. So that's what I think is going to happen over the next week, maybe 2 weeks, and then we can start to recover from there. So we'll see what happens. Hopefully it just happens quick. Maybe tonight and tomorrow. Let's just crash down to 104 and maybe climb back up over 106,900 and consolidate there for the weekend, and then make our way up next week. That's how I'm hoping it plays out. If we can just rip this Band-Aid off, let's get it done fast. Boom, bang, wham, bam, thank you, ma'am. Let's get moving to the upside, right? Christopher, what's up, man? Onyx in the house. Wondering if you can clear up whether Instant Access Patreon member would have access to YouTube member content. Yeah, you have access to everything over on the Patreon for that side. Yes, you do. JD Beats, what's up, man? Waiting to pull the trigger on some powder for some of my bags. Well, Pith and Nadix. Decisions. Yes, I actually have another special coming out over on Crypto Blueprint today. Their AMA that they did. It's about an hour-long AMA spaces. I will be releasing that over on Crypto Blueprint for Nadix today, so stay tuned for that. Dave, what's up, man? How is Bitcoin dominance, M2, and other charts looking? Thanks, homie. I'm just going to save you some time, Dave. Not looking good right now, right? We're looking, like I just said, as long as Bitcoin's moving its way down here to 104, you're not going to find any of those charts saying anything bullish. We need to move down here to 104, fill the CME gap, and we'll start to reevaluate our metrics when we get back above like 106, right? That's when we'll start to see what's going to happen, right? So, all right, let's get into the news. We have a lot to get into, guys, a lot to get into. But I would like to reiterate what my good friend Arnie likes to say. If you're worried about the economy, if you're scared and all that stuff, guys, listen up real close to this.
I say, don't be economic girly man.
Don't be an economic girly man, okay? Suck it up, Buttercup. We'll be fine. Let's keep moving along here. Just to reiterate the CME gap. Like I said, courtesy Tom Crown here, CME gap at 104. So, waiting for that to come down and fill. And then we have another gap sitting at 116,900. So my bet is we are going to drop down to 104, fill the CME gap, and work our way back up to fill the CME gap at 116,900 after that. So, yeah. My second super chat got flushed, apparently. Second super chat, Candyman. Oh, here it is. As a follow-up to the toilet brush, poop jokes aren't my favorite, but they are solid numbers. Oh, Candyman. And then you further commented because it got flushed. My dude, I love it, brother. I love the way you string those together, man. Sorry, buddy, I didn't see that one. I did not see that one. All right, let's keep it going. CME gaps, we've talked about those. Don't be an economic ghoulie man. And let's keep it going. Let's keep it going. What do we have here for XRP reignites talk of challenging Ethereum's dominance? XRP Army in the house. A wave of online debate has reignited over the altcoin's long-term potential, with some traders arguing that the next bullish cycle could redefine its place in the market. The discussion picked up after veteran chartist Peter Brandt highlighted XRP's unusual, clean, long-term structure, calling it one of the most symmetrical formations he's seen in years. His observation prompted crypto analyst Alex Cobb to go further, suggesting that the next sustained rally might be powerful enough to turn XRP into Ethereum's first real competitor. I would say Solana's a real competitor. At the center of the hype is a reoccurring pattern for XRP's weekly chart that traders say often precedes major breakouts. The token has been locked in a narrowing range for months, compressing volatility while maintaining higher lows. A technical setup that, if resolved upwards, could open the door to aggressive price expansion. For Cobb, the other bullish traders, such a breakout would be more than just a chart event. It would signal a narrative reset, inviting both institutional inflows and renewed retail attention. That scenario, they say, could gain further strength if U.S. regulators eventually approve a spot XRP ETF, a catalyst long anticipated by the community. Beyond technicals, market liquidity appears to be shifting in subtle ways. Ripple Bullwinkle, a well-known analyst who tracks on-chain data, recently noted a sharp increase in stablecoin minting, more than $250 million worth of USDC, which he interprets as a precursor to a new round of capital rotation into crypto. Quote, when liquidity builds up this fast, it's not random, he explained. It's money looking for a home, and XRP has the kind of setup that big players notice. The idea of XRP taking aim at Ethereum isn't new, but this time it's finding new energy in the market that's looking for fresh narratives. With Bitcoin stabilizing near record highs and attention turning to altcoins, XRP's reputation as a sleeping giant is regaining traction among long-term holders. The enthusiasm is far from unanimous. Skeptics argue that XRP's use case remains too narrow and that Ethereum's ecosystem advantage is insurmountable. I could see that side of the argument. I could see that. Yet optimism is growing that the token's consolidation phase could soon give way to movement, and that the quiet accumulation happening now could precede a defining moment in its history. Whether XRP truly has the momentum to compete with Ethereum remains uncertain, but one thing is clear. The market is paying attention again, and the next breakout could decide if its narrative has any real substance. Is XRP going to be a competitor to Ethereum in the next bull run? I think it could come close, but don't sleep on Solana either. I love XRP, guys. I think it's got a long way to go still in the next few cycles. Majority of CEOs expect a major transformation of jobs in the next 4 to 5 years from AI.
Confidence is slipping. That's according to a new survey from the Conference Board that shows CEOs' assessments of the economy fell, and most CEOs are expecting a slowdown. Joining us right now is former Fed Vice Chair Roger Ferguson. He's now the Vice Chairman of the Business Council and trustee of the Conference Board. He is also a CNBC contributor. And Roger, walk us through the numbers. What did you find? This is 130 CEOs who were asked about how they feel about things?
Yeah, 130 CEOs I asked, fielded late September, early October, ending October 6th. Your opening was exactly right. A slight slip in confidence. Anything in the negative territory, anything below 50 is thought to be negative. It came in at 48, last time 49. But more interesting is expectations for both hiring and CapEx crept up slightly. And so I think it's a group that's not very excited, but also not preparing for a dramatic downturn. The biggest question we asked is, what are you expecting? And roughly 64% said basically, let's call it slight stagflation. Inflation still above trend, growth probably slowing a little bit below trend. So that's sort of where they are.
That's not something that sounds like they are expecting a recession. Maybe just a slight slow?
That's exactly right. For a period of time, they were appearing to expect a recession. That fortunately did not occur. So right now, I think they're mainly in the stagnation category, so call it 64% there. 25% think they will have sort of trend growth, so they're slightly more optimistic. The biggest news ultimately is something that you've been talking about, and all of us have, which is their expectations on AI. And there, a large majority expect major transformation of jobs in the next 4 or 5 years.
Major transformation of jobs, meaning fewer people being hired or people being hired in different industries?
I think a combination of things. First, in their own companies, people becoming much more productive. When I asked why they're expecting to use AI, it is for efficiency and frankly cost cutting. And that was roughly 52%. A number said that they're hoping to increase services. But on the jobs front, it's major transformation in jobs as we're doing them today, plus expectations of some new jobs. But what's interesting is the pace of change, over the next 4 or 5 years. It's pretty rapid change for what is people describing as fundamental changes to jobs.
One of the things I thought was really interesting is most of these CEOs are reporting having no difficulties hiring overall, and that's a change from what we'd seen. Does that suggest that there is softness in the labor market?
It's a relatively soft labor market, but not declining dramatically. And so, as Chair Powell said, we seem to be in this interesting equilibrium of low hire, low fire, because they also aren't expecting to have major reductions in labor force either. And so I think the Fed's going to take this general notion of no hire, no fire labor market into consideration when they meet in a couple of weeks. And we heard Chair Powell again reiterate that as one of the things that he's focused on.
Roger, you're describing a scenario where it seems like wage gains would be really difficult to come by, which would be positive for inflation expectations. And I'm just wondering whether you don't think of it that way, how the dual mandates can actually affect each other. But that would, I'm not saying it's great that people aren't getting wage increases, but it seems like a very difficult labor market to see any type of wage price spiral from the tariffs, which makes me think we could start going back towards 2. There's no reason for things to stay at 3 right now, inflation-wise.
Well, a couple of good points you just made there, Joe. Yes, when we survey people, expectations for wage increases are roughly in the 1% to 3% category. Noticeably, fewer people were expecting bigger wage increases than that. So you're right. This looks like an economy that's not, driving dramatic increases in wages. And look, the Fed itself is taking a bet similar to the one you suggested that, inflation will gradually trend back down to 2. One also has to say that the expectations of inflation from tariffs has not proven to be, has not sorted out exactly as people had feared. And so, let's keep fingers crossed that the Fed is doing the right thing, focusing on a slightly softening labor market, moving interest rates down gradually. But they are taking, as Chair Powell would say, a risk on both sides. Not proven yet that inflation will gradually move back down. That's sort of the bet they're taking. And we'll wait and see.
Speaking of the Fed, guys, I read this morning that there's now a 77% chance that the Fed will cut rates 3 more times before the end of 2025. 77% chance. So do we start to price that into the markets as well? We'll see. Big Kev says, last night's LFG and Pico team meeting has me wondering if I'm bullish enough. They're going to the moon for sure. Let's go. Let's go. Absolutely, brother. I agree. Very, very bullish meeting. Rise Above. What's up, buddy? Good to see you. Ramona says, absolutely. Such an excellent meeting. Ditto. Hey, Rob, just wanted to ask, outside of Ondo, are there any other good blue chip projects to accumulate now to hold until 2029? Yes. For me, blue chip is a matter of perspective. For me, blue chips would be for a 2029 hold. You'd be looking at stuff like XRP, ZBEC, obviously. I think you're looking at Plume, Moonwell, possibly, Wormhole. I don't know if I said Wormhole or not. PIF, obviously PIF, right? Proppy. Those would be some of the blue chips that I would say are good holds until 2029, just off the top of my head. Beebs, Rob, I have an early entry cost basis on a lot of projects. Is it okay for me to lower my exit price to certain projects? Would you recommend this? It depends. It depends on how fast you get to those price points if you lower them. And if your plan is to be able to roll profits from one project to another, then yeah, it might not be the worst idea in the world to get it, because then you can still get in at lower prices for other projects as well, right? So absolutely, man. Absolutely, brother. What do we got? 373 people watching. How many likes do we have now, guys? 88, guys. Come on. We can get to 100 likes. That's absurd. 373 people watching, 88 likes. Man, That's like just giving me the middle finger. Bitcoin fear index hits yearly low, but it's time to accumulate, not panic, says Bitwise. Recent weakness in Bitcoin's price appears to be have dampened enthusiasm, with Google search interests for the asset falling to a multi-month low. The latest sentiment regarding mirrored conditions typically observed during bearish phases, when caution dominates the broader crypto sentiment. Cointelegraph reported that the Fear and Greed Index has fallen to fear level of 24, its lowest in a year, down sharply from last week's greed reading of 71. This decline echoed sentiment levels seen in April, when Bitcoin briefly dropped below $74,000, and parallels previous cycles of market fatigue in 2018 and 2022. Despite the sharp sentiment drop, Bitwise analyst believes the current setup favors accumulation, not retreat. Director and head of research Andre Dragosh, senior research associate Max Shannon, and research analyst Ayush said that the recent correction was driven largely by external factors, including renewed U.S.-China trade tensions that triggered broad-based risk aversion across global markets. Bitwise's weekly crypto market compass report mentioned that the correction was amplified by a record wave of futures liquidations, with Bitcoin's perpetual futures open interest plunging by nearly $11 billion, the strongest decline on record. Dragosh said that this forced liquidation event has now meaningfully exhausted selling pressure, setting the stage for a contrarian buying window similar to the yen carry trade unwind in August of 2024. Dave says that's a double middle finger and a kick at the junk. Hit the likes, people. Yes, it is absurd that there's almost 400 people here and we only have 103 likes. That is insane to me. Jay, what's up, man? What are the shorts looking like? Oh, yeah, we can go have a look at the liquidity levels. Let's have a looky-loo. What are the shorts looking like on the daily time frame? A move up to $113,000, $113,800 would liquidate about $3.23 billion on the daily time frame. But if we go up to the monthly, look at those shorts, guys. Even a move up to only 118,900, 119,000 would liquidate almost $10 billion. But if we did move up to 125,000, 16.6 billion would be liquidated. So we have a lot of shorts to burn through. Look at how lopsided this is. Look at the longs versus the shorts. This is primed for a short squeeze, guys. Primed for a short squeeze, in my opinion, right? On the monthly time frame, on the daily time frame, on the weekly time frame, the shorts vastly outnumber the longs by huge numbers, right? On the weekly time frame, a move back up to 112,000 is going to liquidate $13 billion worth of shorts. Guys, that's just primed for Binance or someone to reach in there and steal their money. Like, if you're putting in a short right now on Bitcoin, worst idea in the world, in my opinion. Could it go lower? Yeah, I think it will go lower. But look at these shorts, guys. Are you kidding me right now? I wouldn't risk that. Not financial advice. I personally would not risk that. Carlitos, Rob, what do you think about SwiftCoin? How do you think it will go? My thoughts on SwiftCoin have been made very clear, and they haven't changed, my friend. There's 24 SwiftCoin videos on the channel that you can check out to see my thoughts on SwiftCoin and where I think it's going to go. There's even SwiftCoin price prediction videos that you should watch. Ditto, non-crypto question for you, sir. Have you ever watched the show Canada's Worst Driver? I've seen commercials for it and little clips, and it looks hilarious. Like, some of the clips I've seen for it, it's like, you just have to scratch your head, and you're like, how are you this bad of a driver? Right? Like people will hit like every pylon or something. It's like, how are you that bad? I've seen clips for it, brother, but I haven't actually watched the show. So, all right, continuing on, let's go back over to Squawk Box. What do we have going on there? It's a mistake for investors to move to cash when rates are declining, says JP Morgan.
This morning, Salesforce is helping the Dow, obviously, but you would figure since it's tech-oriented, the NASDAQ would be moving as well. And it did a mixed session yesterday. Joining us now, Monica DeCenzo, head of global investment opportunities at JP Morgan Private Bank. You're either, there's two kinds of people, I think, Monica. People that think, wow.
Oh boy.
Wait a second.
Two kinds of people, yeah.
After what I just heard, I'm wondering where this is going.
It'll be fine. It'll be fine. Two kinds of people. People that worry about how far certain parts of the market have come, and people that say that it's justified by the future of technology or AI.
Yeah.
Is it, in your view, are you one or the other, or a little bit of both?
I think I'm somewhere in the middle, which I know you're not going to like, but I think if you spend all your time worrying about the past, you completely miss. Equity markets look forward, right? And so they're looking to whether the next 1, 2, 3, 5 years of earnings look like. And so if all I'm focused on is that we've rallied 90% in the last few years, then I'm never going to be on the train where it's going. And so I try to focus on where the puck is moving. That's hard. And I think at 20+ times earnings, it is very hard to look at valuations and
she used a hockey reference.
Excited to put new money to work.
You didn't think we would notice.
It's a mistake if you just say I'm going to move
we
to
did.
cash, especially when rates are declining.
I can't believe Monica used the train analogy. We have used
the train.
We have used it so many times.
Off the train.
Yeah,
But you know what?
The train's off the
no,
rails.
you got to be on the train. You
I
got
work
to be
with
in
so
it
many
to win it,
clients
don't
that
you?
for 2022 stepped to cash and said, I will come back when there's a pullback.
Still not
and they
back.
never were able to get back in because there was never a sustained pullback that felt good. And so what are you going to do?
So for bubbles and bubble talk, the other day we had someone who wrote an op-ed about, maybe we're in a bubble. Should we use the trailing 12 on the PE? Should we, for technology, if you don't use the next 12,
You have to use forward.
If it goes up 80% in earnings, you're either at 55 times earnings or 30 times earnings.
And
it's a big
I agree
difference.
with what you're saying. 100%, you were right to call Jared out on using.
No, I
trailing.
didn't really want to call him out, but
But
it's
you were
just,
right to do it. But my question is, when you're in a bubble and the bubble bursts, the forward turns out to have not been true.
Be wrong.
Do you believe the forward?
you
at
know
this
the
point?
past,
Right.
but you never know the future completely.
Yeah, I mean, I think analysts are reasonably good at looking out the next couple of quarters, right? They work with companies, they can figure out where things are going. The challenge, and why many have been wrong about AI, is it's really hard to look out 3 years in something like this and figure out what is the impact on margins,
'Cause
what's
it's
the impact on
growing so
growth.
fast.
We don't know, and it's like if you believe the J curve, which is the argument to be bullish AI now, you have to assume numbers are too low. That is tough to do, and I'm not going to make an argument that the S&P should be at 25 or 27 times. I think that's probably foolish, but to use trailing, I just think is probably very inaccurate because you're not appreciating the upside. And I work at a bank, right? You see all the ways that AI is changing the way we do work day to day, the way we become more efficient, the way we underwrite credit, things like that. Like, it is going to change the way we all live and work over the next 5 to 10 years. And it's really hard in someone in my seat to think about what 5 years from now looks like. So it's a bit of guesswork.
But the money that's been pledged for what is really the build out of AI, it doesn't exist right now. I mean, I don't know whether it's going to be printed. Sorkin, you make that point a lot. That money does not exist right now.
Right.
Those trillions. So how much faith can you have that that's going to actually be there? And then the thing I have is, okay, the build out's great.
Yeah.
All the CapEx expenditures, it's going to be like building infrastructure. It's going to be amazing. Is it a payoff commensurate with the trillions that are going into it for productivity or for whatever it's going to do?
We just don't know yet. And everyone's looking at earnings, hoping that companies will say this, but I don't think they know yet, right? It's a little bit of a leap of faith. So when you look at what's being spent, we're watching very closely, what is the free cash flow these companies are generating? Are they levering to do this? Not yet. If that starts to happen, I think you should become very concerned about a bubble. And so that's going to be a big thing to watch. But I've also been speaking with clients who want to get more into AI, and you say, okay, yes, you might want to play the hyperscalers, some of the semi names, but you should be looking at the second and third derivative plays. Where are the sectors that will undoubtedly benefit, but probably have underperformed, have lagged? I think about things like healthcare, that has been a huge laggard, and I don't know how you can't imagine that in biotech AI is going to change the way you innovate and drugs come to market.
That's true. I will say one of the things that happened yesterday when I read a little bit more about it raised a brow. You know, the sex open AI sex bot thing that we were talking about, the Sam Altman's now like, yeah, you can use all of these sex things.
You're going to tie this to yesterday's market somehow?
Well, I am actually,
Okay.
because
I'm
in
interested.
August, Sam Altman apparently said on some, I don't know if it was a podcast, I think it was a podcast, Sam Altman said, you know, we're never going to do things like sex bots because that would get in the way. We don't have to do that. We don't have to do those things that would juice the numbers quickly, but we're not going to do those things because they would interfere with our long-term goals for what we have for this. So if a few months later he's now saying, okay, we're going to juice it and get the numbers up, is he worried now about being able to show the revenue at least more quickly than people had thought before?
Yeah, he's got to jump on the porn bandwagon to really maximize it. But you got to get the porn involved.
Well, because he said that those would be things that would juice the numbers very
Like at the tail
quickly,
end of the cycle.
very quickly get those numbers up, and it makes sense.
But yeah, you know, when we talk about it, it's why you have to have a diversified approach. I think it's really hard to say who's going to be the winner and which is the one company. I'd be very cautious putting all your eggs in one basket. But again, you diversify. I think it's hard to imagine a world where 10 years from now we don't look back and say this was as big as the internet was. And so how do you play that? You got to play it in multiple ways. Just be cautious of valuations. Do some in private, do some in public.
Brad told us yesterday that sometimes the very best bets are the ones you already have. So even if they have high valuations, it doesn't matter. You should continue to put money.
You also said 10 times the internet. I would almost settle for 1 times the internet, because the internet is so, we had no idea 20 years ago, 25 years ago. I can't even figure out the applications for AI that get us to as powerful as the internet.
You know what? Every analyst I work with, it's what they do all day, like on our desks. And so, like, it is changing the way we all live and work, even though maybe for some of us we haven't gotten there yet. But I think, again, 5 years from now, it's going to be a game
And the
changer.
productivity gains are going to be so great that translates into hundreds of billions and trillions of dollars.
One of the big questions on the S&P and valuations was, can margins stay here? And I think this is the argument that maybe they can stay here, maybe they can expand a bit more. And so that would then argue for higher valuations. Again, not 30 times, but maybe modestly higher.
And then there's things in the market other than AI, too, that we didn't even talk about.
There are a lot.
Probably some of those things that out of the S&P 500, there's probably, we just skipped, 480
And
stocks.
earnings have been really strong.
Yeah.
Look at the banks. Look at anything that happens.
This is why you do need a barbell approach. Again, so whether it's looking at boring stuff like fixed income again, you need just some balance to some of the exuberance that you're seeing in these sectors. Gold, things like that.
Yeah. Sex sells, absolutely. Yes, it does. Yes, it does. Juice those numbers. How says very CME Gap-ish wear. There you go. You're really digging the Miami Vice attire. There you go. Shadow, with those additional potential Fed rate cuts this year, what do you expect that to lead the pumps into? Yes, you would. Absolutely. John, super fantastic. Blessings, my friend. Mr. Wright says sex sells. Absolutely. Jared, the sex spot gets the price up. It's working. It's designed. BTC is rolling over. Does that mean that the alt season is coming soon? Nope. Bitcoin has to top first, Mr. Wright. Bitcoin has to top first. It has not topped yet, right? Do you think Swift can go as low as 205, or is it close to its low? I think it could. If it did, holy smokes, would I be buying, to be honest with you. So, yeah. All right. Mario says, I'm here. It's Mario. 50 push-ups, man. You are late. Solana faces bearish pressure as whales move millions to exchanges. Solana is showing signs of weakness as recent on-chain data reveals significant whale movements towards major exchanges. Two notable transactions have caught traders' attention. Forward Industry reportedly transferred $192 million worth of Solana to Coinbase, while Galaxy Digital sent another $50 million to Coinbase. Such large inflows to centralized exchanges are often interpreted as a signal that major holders may be preparing to sell. In today's rapidly evolving landscape, effective PR campaigns hinge on precise timing and clear visibility. Outset PR, a data-driven agency, excels at this meticulously, tracking both token movement and media trends. Their Outset Data Pulse proves real-time insights into crypto media performance, significantly enhances campaign effectiveness. Whale activity tends to have an outsized impact on short-term market sentiment, and this week's transfers appear to have unsettled investors. Historically, similar patterns have preceded periods of selling pressure as liquidity floods the markets. This time, the psychological effect was imminent. Traders became cautious, prompting volatility and a pullback in Solana's price. Solana has slipped below the crucial $200 psychological threshold, a level that had acted as a key pivot in previous rallies. The coin also broke under the 30-day simple moving average at $218.08, reinforcing the short-term bearish outlook. Momentum indicators add to the concern. The RSI has dropped to 42.53, signaling fading bullish strength, while the moving average convergence divergence, or MACD, sits at minus 5.56, another clear indicator of downward momentum. The purpose of any PR campaign is to boost brand visibility. Traditionally, this is meant... why are we reading about brand visibility? I don't care about that. So anyway, there's a lot of downward pressure on Solana right now. Could be a buying opportunity in the coming weeks, guys. Back over to Squawk Box again. Senator Mark Kelly, we're trying to prevent 2 million people from losing their health care coverage. More on the government shutdown.
This hour, we talked with House Speaker Mike Johnson about the government shutdown. Joining us right now from the other side of the aisle and the other side of the Capitol, Arizona Democratic Senator Mark Kelly. Good morning to you. We just spoke with the House Speaker. He thinks you need to come to the table. That's basically the message. I imagine you think he needs to come to the table.
We've been asking for a negotiation with Mike and Republicans for weeks now. We've been talking about it for months since they passed the president's priority legislation that gave the big tax cut to the wealthiest Americans. So we're here. I've been here for weeks since the shutdown started. He gave the House of Representatives a lot of time off. They haven't been in session for weeks. That has impacts. He needs to sit down with us and discuss this to come up with a real solution that works for people. Mike Johnson said he could predict what I was going to say, and he's right. I want to talk about the people that this impacts. He didn't mention that. You know, he talked about some, Washington BS that nobody really understands.
He talked about some stuff, I don't know, I wasn't listening.
So in terms of, look, this has become, a massive game of finger pointing, and there's a game of chicken going on here, basically. Who's going to come to the table first? What can be on offer? This judge, obviously,
government officials
in San
playing
Francisco
chicken
said
with
that
the
the Trump administration can't,
Americans' money.
Fire people en masse. Does that make you think that you are now in a better position than you were 24 hours ago?
I don't think this is about who is in a better or worse position. This is about people, many of them my constituents, but they're all over the country. People like a woman I talked to last week, Emily, whose husband's a pastor. She doesn't get health care through his work. She's got 3 kids. She says the Affordable Care Act, including these subsidies, is what makes her finances work. She's had a complicated pregnancy in the past. Without this, they go bankrupt. I talked to another woman who's 63 years old who had a head injury with a $10,000 bill, but because of the ACA, it was $1,000. If her premiums spike, which is what it's expected, she's not going to be able to afford health insurance anymore. And then she's one accident or illness away from bankruptcy. You guys know how this works. I mean, on your show, you know how, financial stuff works Senator, for families. Mike did. Go ahead, Rebecca.
Thanks, Senator. Just on MSNBC this morning, Senator John Thune was on, and he offered a deal for the Democrats. He said that if they reopen the government, there will be a process and a vote on the ACA tax credits. Is that a deal you'd take?
Well, we're looking for a negotiation with Republicans, which is impossible to do this when House members aren't even here. I can talk to Republican senators about this, and we've had some good conversations. They know that this is hurting their constituents. In some states, Alaska as an example, premiums going from $600 to $4,000 a month. That's unaffordable for most people. One of Mike Johnson's Republican colleagues, Marjorie Taylor Greene, has been very vocal about this. She says her Republican leadership has no plan for how to deal with people's premiums. They're going to double. And Mike doesn't want to talk about this. All he brings up is some Washington process on this issue.
But you know that we're not going to fix all the things that need to be reformed about Obamacare before the government reopens. And you talk in a very principled way about so many things so often, Senator. And in the past, Democrats and government shutdowns, whenever there's been even a possibility of it, they would stand tall that that's not the way to do things, always. And both sides, I know how much health care means to you, and I'm not questioning what you're saying and your sincerity there. But the next time Republicans have something and feel the opposite side of the aisle, feel just as strongly about something, if they take the tack of closing down the government, not reopening the government, to try to force their opponents to do what they want, it's a terrible precedent. And I think you know that. And I can't believe Fetterman's the only one.
I love what he's calling them out on here. He's saying the Democrats always say that, and it's vice versa for Republicans. They say, oh, the other side of the aisle, they're horrible people for shutting down the government, but here they are doing it. So the next time the Republicans do it, is this guy going to jump on his high horse and talk about how the Republicans are horrible people for doing exactly what he's doing right now? I love that he's calling them on this right now. I love it.
That acknowledges that a shutdown has been something you have taken off the table again and again and again. And now suddenly the ends justify the means for what you're looking at. And only one person in the Democratic Party has broken with the ranks. It's like, I don't understand it. It hasn't been working well for Democrats with Mondani.
This is pretty simple.
It's different when we do it.
The government does not have to be shut down. It doesn't have to be shut down. We can
Senator,
fix this here in a matter of just a couple days. I mean, this could be easily solved by sitting down at the table.
To get past 60, you need some Democrats to reopen that's what's going to happen, Senator. You close the government down because you want $1.5 trillion for all these different things that Schumer wants. It's obvious to everyone, although maybe you can convince the public that it's the Republicans, but it's not.
Joe, we are trying to prevent 2 million people from losing their health care coverage. And Joe, I think you know this. When people lose their health care coverage, some of those people die. Other people go bankrupt.
They're saving lives now.
This from happening. I've seen estimates that you're talking about tens of thousands of people a year that could have that kind of outcome if this isn't fixed. And we very simply can get this fixed and open the government. And here's the thing, the president has talked about how he wants this fixed. He wants these subsidies to be dealt with. So he agrees we should open the government and we should fix the subsidy issue under the Affordable Care Act, and that's all we want. So I don't see what the problem is.
Right.
And
so
if the president
says
was to get engaged on this...
I saw you say that yesterday, sir, on I think Fox, that you said if the president comes out and says, I will make that happen, you would trust him and go along with that. Is that how this ends? Is that how we reopen?
Well, I think we need the president to make that happen. Like, he needs to engage with Mike Johnson and John Thune. They seem to follow his lead on everything. That's the way this ends.
Interesting. I love that he called them on it, though. It's true. What's good for the goose is good for the gander. You can't say that, one side of the aisle are horrible people for shutting the government down and then do it yourself and say, yeah, but it's different when we do it. No, it's not. Right? Congress is still getting paid, which is, yes, I agree. Yeah, they shouldn't be getting paid while it's shut down. Dems created ACA. If it was so great, why does it cost so much? Sounds like no more October. RIP. We'll see, right? I don't count my chickens before they hatch like that personally. Remember, there's a CME gap at 104K, but there's also a CME gap at 116.9 as well. So likely we rip down to 104, hopefully quickly, and then we rip back up to 117 to fill that CME gap, and then we work our way back up, right? Shannon, what's up, man? A little late, so doing my push-ups now. There you go. Get those gains in. No October shutdown by the government. Jared says it's getting bad. My mom depends on Medicare, and they cut her food from $3,500 a year to $900 a year. Oof! How the heck is she supposed to survive off that? That dude just called bullshit. Yes. Kale Dog holding strong. Absolutely. Absolutely. All right. What else do we have? Let's get into this piece here. Bitcoin price dips under 110,000. What's next for cryptocurrencies? The price of Bitcoin has once again fallen below $110,000, leading to further losses in the cryptocurrency market. It's only a loss if you sell. Keep that in mind, guys. The recent dip was accompanied by new statements from China claiming that tensions were fueled by the United States. The U.S. held a contradictory stance. As these tensions mount, the question arises, what does the current situation look like for cryptocurrencies? The U.S. stock markets were recently bolstered by supportive earnings reports and expectations of even better ones, an even better outcome. Despite this, as this report was being prepared, NASDAQ showed signs of turning negative. The BTC value fell back to 108,500. Similarly, Ethereum dipped below $4,000 and Solana coin slipped below $192. Yesterday, Besant indicated that discussions with China would continue throughout the week. He also suggested that the recent export restrictions might have stemmed from the Chinese Deputy Minister of Commerce. However, today's unfavorable remarks from China suggests that things were not going smoothly. Furthermore, there is an anticipated decision regarding a potential delay in the tariffs with China come November. In this complex climate, it appears that the cryptocurrency market could benefit significantly from Trump taking concrete steps to de-escalate tensions. Currently engaged in conversations with Putin after a confrontation with Russia, Trump's potential announcements regarding peace or the postponement of secondary sanctions might lead to some support. Notably, within the last hour, $160 million worth of long positions were liquidated. There you go. Jared, can't BS a BSer, right? Yes. Rip says, gotcha, just tuned in and was waiting for the beginning where you suggested the 1 to 2 week downturn trend. There you go, brother. There you go. All right, what else do we have? We got even more, guys. We got the other side of the aisle here on Squawk Box. Mike Johnson talking about the shutdown himself.
Now in its third week. Joining us, House Speaker Mike Johnson. Mr. Speaker, thanks for coming on this morning.
Glad to be with you, as always.
It's good to see you. You know, you've done your job. I know you got a lot of opinions and comments and everything else, but this is like really not your problem. I guess it is. It's all our problem. But you sent over a bill to the Senate, and that's where Senate Democrats are not giving it the go-ahead to reopen the government.
It really is as simple as that. I mean, we passed the bill here September 19th. We did the work. We sent it over in bipartisan fashion, by the way. We did have one Democrat who had common sense enough to not shut the government down. We sent the bill over to the Senate, and now they have spiked it 9 times, okay? They've had 9 votes now, 44 Democrats over there voting down the bill, and they're exacting now real pain for real Americans. I mean, the troops are getting paid, thankfully, because President Trump heroically stepped into the fray here, and they found a way to reallocate some funding to make sure that active duty service members got their pay yesterday on schedule. But that's a temporary fix. And all of these other programs and services, I mean, health services.
I'm sorry, I got to step in for a second here. How are you going to have a Congress who's not working right now, getting paid when the government shut down, but you're not paying the troops? How does that math? That math ain't mathin' to me. I'm sorry. Troops should be getting paid no matter what. No matter what's going on. Government shutdown, guess what? Troops get paid. Anything else that's happening, guess what? Troops get paid. They should be your top and always priority that's just my opinion.
For veterans and, nutrition programs for young pregnant women and, all the things that the government does for the American people are suspended right now. Half the civilian workforce is on furlough. And we're in dire straits. And every week of a shutdown, we surrender $15 billion in gross domestic product. I mean, this is real cost for real people. They're playing political games, and it absolutely has to end.
Mr. Speaker, we're going to have Senator Kelly on a little bit later. And I saw him yesterday saying the way that to end this, it can be ended by President Trump, I guess, giving assurances that those subsidies would be extended. I don't know whether that would be enough. I mean, Chuck Schumer, it's a $1.5 trillion wish list of stuff that he's still insisting on. Here's what's worrisome to a lot of people. If something like that were to happen and the president did say, okay, we're going to get a deal, if it's done without any reform of Obamacare, just extending these subsidies, because it's not the Affordable Care Act, it's the unaffordable Care Act, and something needs to be done for reforms. If you just did a clean extension, you might lose some of your people on the House side, and you might need Democrats to get it passed in the House, which would threaten your speakership. So you're between a rock and a hard place at this point.
Well, this is not about me. It's about the American people. Let's make something very clear. Let me predict what Senator Kelly is going to say on the show. He's going to give you a long, impassioned speech about health care and how the subsidies are so important to make sure that people don't die and all of this. Let me tell you something. This is not a health care fight. This is a very simple funding fight. It always was. They have created a red herring. The subsidies don't expire until the end of the year. We were always planning to have the thoughtful debate and deliberation over that in the month of October and November before the subsidies expired. They know that. They grabbed that issue from the end of the year and pulled it back into September to try to pretend like that was the issue. It never was. Now, let me say this about the subsidies. It needs a dramatic amount of reform if indeed they're going to be extended. Because as you know, there was no income caps. You have very wealthy people getting subsidized for health care. It was a COVID-era patchwork situation that the Democrats did on their own. And by the way, they voted to put the expiration date on it at the end of 25. They did that themselves. Why? Because they knew it would have been absurd to try to extend it any further. It has driven the cost of health care up dramatically. There's no hide protections in that program. So the point is, that is a very complicated issue. We have 535 members between the House and Senate. This is a deliberative legislative body. It takes a while to find consensus on an issue that complicated. They know that. So they have grabbed onto that. It is a farce. It is a red herring. It is not the issue of today. Today, the issue is to get the government open again so that we don't hurt our economy, hurt our national security, and hurt the American people who depend upon all these services. It's plain and simple. It's as simple as you outlined at the beginning of this interview. And I hope you'll keep bringing these senators back to that simple point.
Well, there need to be things. The expiration of subsidies is one thing, but the increase we've seen in how much it costs to maintain Obamacare is significant. And Kimberly Strassel, this is a week or two ago, the government mandates and insurance subsidies have created a toxic stew of industry consolidation, inflated payments, opacity about the payments, constrained choices, and the steady erosion of better employer-sponsored plans. It's not as simple as just extending these. Here's the other thing that I might ask the Senator, Speaker Johnson. Both sides, we know what happens in this country. Republicans have fervent beliefs about something. Democrats have fervent beliefs and deeply held beliefs about health care. So in this case, they're saying it's different this time. This is so important that we are allowed to close down the government because it's so important to us, because we want people to have health care. Republicans have issues that are just as important to them, and this opens the possibility of getting the other side through blackmail to do what they want by closing down the government. And it's hypocritical, and anything that sugarcoats it beyond, I don't see how they can look in the camera with a straight face and say anything other than that.
That's exactly right. And they have voted over and over and over on short stopgap funding measures like CRs In fact, 29 out of 30 times since 2017, Chuck Schumer has voted for CRs. He voted for this exact measure in March of this year, 7 months ago, and gave impassioned speeches about how it was the only thing, the only option, regardless of all of our different preferences and opinions on legislation. Republicans care about health care. We're not just talking about it, we're doing it. In the big, beautiful bill, in the Working Families Tax Cut, we reformed Medicaid to make it work better.
But Speaker Johnson, I mean, the president and Republicans have said we're repeal and replace, and it's like we're in a wilderness. Republicans are in the wilderness on what to do to try to fix our health care.
Actually, we're not. We're not. We've got pages and pages and pages of ideas on how to reform healthcare. You can't rip Obamacare out at the roots. It's too deeply ingrained now, and that's the problem. No one's talking about repealing and replacing Obamacare, but we have to increase access to care, quality of care, and bring down the cost. The Democrats have demonstrated over and over the costs go through the roof when they're in charge. This was their health care plan, right?
Young people don't need Cadillac plans, Mr. Speaker. They don't need A to Z,
That's
and
right.
they're supporting the entire this behemoth that's called Obamacare.
Yes.
It's unwieldy and it's dying of its own weight.
Speaker Johnson,
you and I can talk about that for 90 minutes. Yeah.
And I would listen for 90 minutes. Oh, man. What do we have? Over the top, Rob for president. Amen to that. Guys, let's get the likes up. 422 people watching. We have 129 likes. My goodness, guys. Smash the like button. Holy smokes. Also, we are only 44 subscribers away from 15,000. So hit the subscribe button. Help push us up over 15K subs. And if you're watching over on X, shoot me a follow over there, guys. We are having exclusive content over there. We're going to start doing spaces there as well, so make sure you're there. Justin says the crypto market is torturing me. Hey, you're going to be just fine, my friend. You're going to be just fine. Dave, I agree with you, man. The people risking their lives should be the ones getting paid no matter what. Danny, what's up, buddy? AK says, time to DCA more. Let's get it. All right, why the crypto market's going down? Liquidity squeeze, altcoin panic, and trader stress intensify. Crypto markets are flashing red again. The total capitalization sliding 2.4% in the past 24 hours to 3.68 trillion, extending a painful 12.9% weekly decline. The drop comes as signs of financial tightening ripple through the U.S. system, draining liquidity and weighing on high-risk assets. The SOFR EFFR spread widened to 0.19, its sharpest since late 2024, a signal that short-term funding costs are climbing. Banks borrowed $6.75 billion from the Fed's repo facility this week, a level not seen outside quarter-end stress events since 2020. The result? Investors are cutting exposure across crypto equities and tech as risk appetite evaporates. Derivatives signal heavy short positioning. In derivatives markets, tension is building. Perpetuals open interest surged nearly 9%, even as Bitcoin futures volume dropped 40%, showing traders are doubling down on short positions rather than adding fresh longs. Funding rates remain negative. The RSI, reading near 33, confirm an oversold setup that could fuel a sharp rebound if sentiment flips. Still, for now, the imbalance points to caution rather than recovery. With volatility low and leverage high, even minor liquidity shocks could spark a squeeze in either direction. While Bitcoin holds relatively firm, altcoins continue to bleed. BNB chain token, new projects like YB, and upcoming unlocks plays such as Astir, which I did. I'm tongue-tied. Holy smokes! Just did a deep dive video on the other day. Make sure you go check that out if you want to know everything there is to know about Astir. Have all seen double-digit losses with capital rotating rapidly back into Bitcoin. Dominance climbed to 58.8%, its highest in a month, while Ethereum slipped 12.8%. The altcoin season index fell to 29, signaling that Bitcoin season has clearly taken over. Market sentiment at fear levels. Fear and greed index now sits at 32 in fear, and the average crypto RSI at 39.1, reflecting widespread oversold conditions, which means that sellers could be becoming exhausted. Unless funding conditions improve or the Fed steps in to ease pressure, crypto could remain tapped in a tightening cycle, with Bitcoin's resilience once again standing in stark contrast to the rest of the markets. $107,000 Bitcoin, $107,800 Bitcoin to be precise. Are we going to fill the CME gap at 104,000? I say let's just rip down there, get it done tonight or tomorrow, consolidate over the weekend, and then rip back up to 116,900 to fill the CME gap up there. Let's put a box up there, guys. Let's put a box up there. 116,900. So you have another CME gap right about here. Right? Another one right there. Let's make that one green. Let's make it green there. You gotta, that's for the positive side, right? So that's the CME gap to the upside. This is your CME gap to the downside. Wick down, fill it, and then let's work our way back up to fill the CME gap at 116,900. That's what we're watching for, guys. I have some coaching calls to take care of over on the Patreon. Get over there, guys. Book your one-on-one coaching calls or join our group coaching calls today. I also just dropped a new trade in the trading group. Check that out. All of our training courses are free. If you don't know how to trade, you can learn. It's free to all of our Patreon members. So check that out and so much more, guys. I also have another small cap gem I will be dropping over there also. The link is down below. Or if it's easier for you, check out the QR code in the top right-hand corner of your screen. Click like if you like this video. Click subscribe if you really liked it. I'll see you guys in the next one. God bless.